Good afternoon. Good afternoon. I'm back. Welcome to a Wall Street Wednesday. I've been gone for a couple of weeks, but I'm back. So I'm looking forward to reaching out and touching with you guys and talking more about the market. Before I go too far, let me put my disclaimer up there. Welcome, guys. Welcome. Again, these are my thoughts, my opinions. If you decide that some of these things interest you, I advise you to speak to your financial advisor before going forward. Some of the things I talk about are risky and aggressive, so just want to mention that. So again, as my lawyers say, what's going on, Mr. Cornfield? I can't run forever. I like that. So again, if you like any of the ideas, if you decide here's something you like, you want to do anything with it, make sure you speak to your financial advisor. All right, Mr. Cornfield, how are you, sir? I thought about you today as I looked at Goldman Sachs at a new high. Again, nothing against the other companies, but as I mentioned to Mr. Cornfield, as I mentioned to him earlier, a couple of weeks ago, he asked me about some of the financial stocks, and I can't remember which one he mentioned, but my comment, and again, I'm pretty sure like Morgan Stanley's at a new high, so they're working. My comment to Mr. Cornfield at the time was, I like to buy best of breed. So when it comes to financial stocks in terms of the markets and you're playing that, best of breed is Goldman Sachs. So that's the reason why I recommended Goldman Sachs. Again, best of breed. All right, so it's I've been out for 3 weeks, so my fan base is a little slow showing up, but I'm back, guys. I'm back, so let's put it out there. So a couple things I'm going to do today. One is I'm going to talk about welcome. I'm going to talk about the futures market. I was Cowen, that's what it was. I couldn't remember, Andy. Yeah, all the financials are running, like I said to you. Cowen's probably doing well too. I'm punching up the symbol as I speak to you. All right, not doing as well, but that's okay. It happens. But like I was saying, well, it's actually not too far off its all-time high. So again, I'm going to say that that's doing well. Cowen is in a trading range right now between 37 and 44. Volume's kind of light, so look for a breakout. But anyway, I'm a firm believer in if you're looking at a particular industry or sector and yet you want to trade, I believe in going in best of breed. Now, don't get me wrong. Sometimes the industry or sector is moving so fast that some of the other stocks in the group that are doing well haven't had a chance to catch up. But again, that's what's going on. Thank you, Mr. Brown. Yes, thank you for welcoming me back. I thought it was minor surgery. At least that's what I thought. But once the surgery was over, I realized it wasn't minor, and it really took a toll on me. I shouldn't say it wasn't the pain, just the fact of I was out of it for basically the last 2 weeks, out of touch. So that's what's going on. Again, nothing major. I'm not back to 100% yet, but it's physical. So it's not mental. It's basically just me retraining. And for those who have known me for years, like the Brown brothers have, the twins, I had to have knee replacement surgery. My knees went out 20 years ago. So I've been walking on bad knees for the last 20 years, and I knew it. So it was just a matter of time. You have too much heart. All right. All right. So let me pick up. Let's just get going. Commodities. Natural gas. Natural gas is running. I'm getting both a fundamental and technical buy. It broke through its 10-day moving average. You can go long natural gas right now. The other one you can go long right now. The last two are currencies, but these are new recommendations. The Australian dollar, very bullish. Again, technically and fundamentally, it's giving me a buy signal. Australian dollar. And the last one is the Brazilian real. Short the Brazilian real. Again, broke its 10-day moving average. On the technicals, fundamentally, the commercials have been shorting the Brazilian real, and it's a major short position to have in it. So with all that said going on, I think the price is headed down from here. So those are the three. on the commodities. The other ones I haven't gotten any full read. In other words, I'm seeing, fundamentally I'm getting a breakdown or a buy signal, a sell signal, but technically I'm not getting the same signal. So as you guys know, I like to, when it comes to commodities, I like to buy both, and I'm getting a technical and a fundamental buy recommendation. All right, on the currencies, let me say this. I'm going to go through the 5 we always talk about, but Bitcoin, Ethereum, and Cardano ADA have all run. They're all breaking out. They're all right within striking distance of their all-time high. Now, that doesn't mean that they're going there right now, but I'm just letting you know that they're trading extremely well. So Bitcoin just entered today a range between its new, an old trading range between 46,000 and 60,000. You got some minor resistance at 50,000, but based upon the moves that we've seen, again, cryptos are a different animal, but based on technical analysis, I would expect Bitcoin, if everything holds up, to challenge the old high, which was right at $60,000. So I do see that. Ethereum, same story. Right now it's at 3,200. That's the trading range between 3,200 and 3,600. If it breaks through that minor resistance, and when I say minor resistance, it's not a lot, but it's there. If it breaks through that minor resistance at 3,600, expect for Ethereum to challenge 4,300. All right, so again, Bitcoin, Ethereum. ADA is at $1.85, right at resistance. $1.85, you got some resistance at $1.99. You take out that $1.99 resistance, you're going to take out the high. So Bitcoin, Ethereum, and ADA are all within striking distance of their old highs, which were set several weeks ago. Now, the other two I want to talk about is Ripple and Doji coin. Now, Ripple, it's run, but not nearly enough. I mean, it's running right now, it's at 97 cents. The old high is $1.95, and there's a ton of volume, ton of buying, trading in between the 97 cents and $1.95. So you're not even halfway up, you're not even close to its all-time high. The other one is Doji coin, or Doji. I wrote down a lot of work to do, exclamation point. Doji right now is at 27 cents. The old high is at 74 cents. Doji did not participate in the bullish run that we've seen over the last 3 or 4 days in the cryptos. But again, of the 5 that we track, that I'm tracking for you guys, Doji's the one that has no real world applications. So not surprised that Doji's trading at 27 cents and did not participate in this rally. All right, with that said, Coinbase. Let me try, bear with me a second, I'm putting up the symbol as we talk now. The reason why I bring up Coinbase is, and I had mentioned this when Coinbase went public, Coinbase is going to have a very close correlation to how Bitcoin trades. All right, by far, Bitcoin is the largest asset that the Coinbase investors own in terms of their trading platform. Now, Coinbase also just signed an agreement, I think it was with PNC, to provide cryptocurrencies for their banking clients. But the bottom line is Coinbase, like the cryptos, has run over the last 3-4 days. It broke out of a trading range between 220 and 260. Right now it's at 278. You've got some resistance here at 300. But the thing I'm going to say to you guys is, if you're going to trade Coinbase, Coinbase is a proxy for right now Bitcoin. So if you see Bitcoin start to run and you don't want to get in Bitcoin, look at Coinbase. Now, Coinbase is a trading platform. It's not a currency. But again, there's all these industries. No industry is in a bubble by itself. So Bitcoin has an influence, and certain things influence Bitcoin. Now, we have to figure out what they are. But when it comes to Coinbase, there's a high correlation between Coinbase and Bitcoin. Just that simple. And as Bitcoin goes up in value, you see more activity in terms of trading. You'll also see Coinbase run with it too. Now, it looks like Coinbase reported earnings yesterday, and they reported $6.42. Estimate was for $2.32. So they blew out the number. That was on August 10th. They blew it out. But again, just so you know, the stock couldn't hold a run today. I'm telling you, this is a correlation between this and Bitcoin. All right, those are all my cryptocurrencies. That's my my commodities. Now some updates. Let's see. I forgot the name of this company that quick. Krispy Kreme. Krispy Kreme. Again, setting new lows. Setting new lows. I had mentioned to you when Krispy Kreme came public to get short, setting new lows. No question about it. The other one I want to, I'm going to mention real quick, NASDAQ. I'm long NASDAQ for the same reason I'm telling you to buy Coinbase. I'm long NASDAQ because the actual stock for the exchange, because of the trading activity and the new high set on NASDAQ itself. So, every time you guys trade Apple, Microsoft, you trade any of these NASDAQ stocks, NASDAQ makes some money off that. So I'm using the bullish run in the market, and I'm playing that with NASDAQ stock. I'm doing math in my head real quick. I think I'm close to being up 10%. The other thing I wanted to mention too was DIDI, D-I-D-I. I wrote next to DIDI, D-I-D-I, dog. Again, now the all-time low on this thing is right down here at 7 cents and change, $7.17, excuse me, $7 and change. It had a little run there and it's coming back down again. So again, I don't know why anyone would buy this stock. And if you're buying this stock, you're basically trading on speculation. Now, the last one I want to talk about that I'm going to bring up, I'm going to bring up two other things, is Robinhood. All right. I actually was looking at Robinhood, and I looked at it. I was watching it, trying to. So here's the thing with Robinhood. Robinhood broke out, it basically broke out at $47 and ran to $84 around there, and then it's backing and filling. Two things, for those who understand technical analysis, stocks tend to go and fill their gap. So on Robinhood, there's a gap between 48 and 51, which the stock seems to be filling right now. So it's going to fill that gap. So for me, right now, Robinhood is what I call in the middle of no man's land. And what I mean by that is it's not showing me any reason to be long, but it's also not showing me any reason to be short. All right. So with that said, and also I think Robinhood, quote unquote, I think there's some really rough roads ahead for Robinhood. All right. Let me explain why. FinTech is here. More and more companies are moving towards FinTech. Robinhood is not getting less competition. It's actually getting more competition. As some of these bigger firms with reputations actually go out there and start trading, Robinhood is probably going to be not as popular choice. I guess that's what I'm trying to say. Robinhood has a lot of shortcomings. The margin account, some of the other things. You're not getting the best price. The reason why they don't charge you any commission is because they sell the data, and also they'll try and trade the spread. All right, trading the spread is nothing more than trying to buy off the bid and then give it to their clients at the offer. So that's what trading on the bid is. So anyway, getting back to Robinhood, here's my numbers. If it breaks through the high side at 84, I'd get long and trade it to the upside. On the downside, you've got some major support here at 34. If it breaks that, support right now is at 51 where it is. So it's sitting at near-term support. If it breaks this and goes back, if it breaks below I believe the all-time low is 34 and change. But if it breaks that low, looks like 33 and change. It breaks that low, get short. That's what I would do. The other thing too with Robinhood is Robinhood might get some sympathy from a bullish market. And I believe right now we're in a bullish market. So, and the last thing I wanted to talk about before I turn it over to you guys, and again, I do not apologize, but I do say to you, I'm a little out of touch. I've been down for the last couple of weeks, but I'm moving back. I'm getting back in. So I want to say that the VIX, I know we talk about the VIX. I use the VIX as a buying indicator. I talked about how the VIX works. The VIX right now it's not extremely bullish, but the VIX is bullish. So let me count what's bullish right now. The VIX is giving you a bullish signal. All right. Not a buy signal. It's just showing that it's bullish. The markets are at all-time highs. That's bullish. Inflation is high. That's actually bullish. Now, let me tell you why that's bullish. Because the Fed has not shown any indication yet of raising interest rates. Now, it's a double-edged sword here. Inflation's high. We knew it was going to be high. People are worried because inflation means the price of goods and services have gone up. But the reason why inflation is high right now is because the U.S. government is trying to stimulate corporate America and stimulate our economy and trying to put more cash and more money in our pockets. That's why I say it's bullish. The other thing is the number of stocks setting new highs is not at a new high level. What that tells me is there's a lot of money behind this still. There's still money out there. The last one, last but not least, again, and a lot of you have heard me say this, in my lifetime, let me say this again, in my lifetime, I'm not going to tell you how old I am, but let me put it this way. I've been around. Every recession we've had in my lifetime, in fact, going back to the 1920s, 30s, every recession we've had was preceded by an inverted yield curve. Let me say it again. Every recession we've had since the 1920s or 30s, I got to actually get my stats on this. And trust me, that's a lot longer than me. I've been around. Every recession we've had has been preceded by an inverted yield curve. And that inverted yield curve is a leading indicator which would tell you what's going to happen in the market anywhere from 6 to 18 months before it happens. As an institutional investor, it gives you time to make decisions, gives you time to adjust your portfolio. So with that said, we have a classic yield curve. We don't have an inverted. Classic. Low short-term rates, high long-term rates. There is not a recession coming any time in the next 6 to 12 months. You might see some profit taking, some pullback. We're seeing sector rotation. But again, stay bullish. The other thing I'm going to add to this is a number of the IPO stocks that we track, and it always happens. I'm down for 2 or 3 weeks, and a number of these stocks that I track in the IPO market actually broke out and ran and set some new highs. So again, I'm going to tell you, oh, by the way, there's also some IPOs that came out that did not hold their syndicate bid the first day, and they all sold off. So I was going through that list today, looking at some of these things. So all I'm saying to you guys is there's opportunity out here in the marketplace. Now, with that said, I think I've covered everything I wanted to cover. I'm looking through now. I'm going to open this up and I'll take any questions. Look at Upstart. Look at Upstart. Upstart was up what? I'm pulling up the chart now. Look at that gap in Upstart. And you know what that was from? That was from earnings. Look at that gap. Now I'm going to bear with me a second. I'm going to a weekly chart just on Upstart. And you guys know that so when I made some good money in Upstart since it went public. All right, now here's what's interesting about Upstart. I'm looking at the chart right now. I'm on a weekly chart. 1, 2. Going to be interesting. Right around this 190 area, 180, 190 area, if we get up here and don't hold this, that would be a double top. So for those who understand technical analysis, double top, and depending on how it looks, that double top could end up becoming an inverted head and shoulders. So just take a look at it. I'm not making that kind of prediction. I'm just telling you what it looks like. I think the stock is doing extremely well. Come on, chart. I think the stock is doing extremely well. I'm looking at the chart on it. And bear with me a second. I'm just going to zoom in here. Yeah. So here's the thing with Upstart. So a couple things. One, just be leery. The only reason I say be leery, volume is huge. All right. So this thing broke out. No one was expecting this. I would expect to see some follow through, but be careful because, as I mentioned to you, stocks like to go and fill gaps. You got a gap between 140 and 160. You got a 20-point gap in here. And if you believe in the fibs, which is 140 to 170, which is 30-point move, you're looking for a 15-point to 20-point pullback just on sheer technical analysis and Fibonacci's. So my only point in saying that to you is that if you actually trade this, it look really well. I got to be careful. I say this. I would not chase this. I'd just be a little patient. All right, that's all. If you're in it before they announce a number, God bless you. Good trade. Stay with it. But I'm not sure if I would I'm not sure if I would take a new position in this at this point. Not yet. Sector rotation and how to play it. Real simple. There's a couple of ways you can track sector rotation. It's easy to track it because they provide all that information. So a couple of things is, and here's the thing about sector rotation. Sector rotation is nothing more than the institutional investors. Well, let me back up. Portfolio manager. You're a portfolio manager. All right? You're managing all this money. Hedge fund, portfolio manager. Your goal is to outperform the market and put money in your client's pocket. All right? That's what your goal is. Now, not everyone follows that, but that's what your goal is. All right. You will move your money into sectors, move it out of sectors and move it into other sectors as you start to forecast where you think the economy is headed going forward in the future. So let me give you a for instance. If I think we're headed towards a recession, I'm going to move out of my high growth stocks, heavy leverage, a lot of not margin, but a lot of debt on them. I'm going to move out of those because they're very susceptible to being hurt by recession, and maybe look at things that are more, what's the word I want to say, more basic material, basic industries, consumer staples. If I think the market, or if I think the economy is about to take off and explode, I'm going to rotate out of those type industries and rotate. And typically the financial stocks start a bull market run. So maybe you look at the financials, and the financials have been running. Near the tail end of a bull market run, you're going to see movements into what we call the hard assets, oil, gas, gold. And the reason being is because at the latter stages of a bull market is when inflation kicks in. Now, again, I know I told you inflation's high, but inflation's high this time around because the Fed is pushing to keep inflation high. Now, the Fed's not going to push long, but the Fed has also come out and said that they plan on keeping rates low until at least 2022, maybe even 2023. Now, so the other thing you can do for sector rotation is once you see a sector is getting hot, this is just me, I would look into the sector and see what is the top performing industry within that sector and what are the top performing stocks in that sector. All right. I'm all about best of breed. If I'm putting together an NBA team, I'm not going to, this is me. So let's talk about it. If I'm putting together an NBA team, love Carmelo, but there's no way I'm picking up Carmelo Anthony. There's not much upside to Carmelo Anthony. There's more downside to upside. All right. So if I'm looking to build and go forward, I'm looking for the young superstar. I'm not looking for the guy who, they were a great young company, but as they matured, they started to become an industry performer and they started to flatten out. I don't want that. I'm here to make money. I have put up triple-digit returns in my portfolio, so and it wasn't luck. So I'm here to make money. So look at what sectors are rotating into. Oh, and by the other thing too is some sectors, even when they take off, don't take off. So what do I mean by that? I really am looking at stocks that I believe have the chance to double in price in 6 months to a year. All right. No offense intended. Johnson & Johnson stock is not going to double in the next year. Just not. All right. I like the stock. I own Visa. Visa stock's not going to double in the next year. All right. It's not. But it's a good company, solid dividend, solid growth, blah, blah, blah. Great for my retirement account where I don't want any risk. But again, that's how I play sector rotation. Now, the other thing too is when sectors fall out of favor, they're actually good week. Okay. The other thing you can do is, the other thing that you can do is, I'm reading, I'm sorry, is you can also track money flow. Money flow in and out of stocks. All right. They actually will track money. Okay, I got it. All right. So I lost my train of thought here. Sector rotation. Oh well, life happens. All right. Let's see. Ham, you say I am initiating on it, not convinced of the business model. See, Ham was talking about Upstart. So he's not sure of the business model. Well, we'll look and we'll see what's going on. But the bottom line is, on a technical basis, it's for a technician. What I'm going to say is it's right in the middle of between a rock and a hard, not rock and a hard place. It's in no man's land. All right. The overall trend is up, but you've got some things here that say it could come back and fill this gap. Although they did blow out the number, and volume is just tremendous. So you might not see that pullback. I would wait to see if it takes out that old high. Tony, I think I covered everything. There was something else I was going to say, and it just slipped my mind. You and I, let's say you're an aggressive trader. Maybe you own 1,000 shares. Maybe you own 10,000 shares. No offense intended to you or me. 10,000 shares, you are a small investor. All right. You can get in and out of the stock in most cases in minutes, in seconds. These institutional investors, when they start their sector rotation, understand this. When they start their sector rotation, it's going to require them to take several days, maybe even several weeks to liquidate their position and move it and change it. That's why portfolio managers always think 6 months to a year out. They start moving based upon what they think is going to happen because their portfolios are so large, it takes them days to liquidate a position. All right, you cannot drop 1 million shares on the market and expect not to have an effect on the bid or the price of the stock to drop. So these guys, you don't want to negotiate against yourself. What I mean by that is you don't want to drop all the stock on the market, move the price down, sell your stock, and then once your selling pressure's off, the stock price moves back up. As a portfolio manager, that's not a good job. So with that said, Tony, the other thing you can do is when you see the sector rotation start to happen, understand it's not going to happen in one day. So you do have time to participate. All right, that's the word I want to use. You have time to participate in the sector rotation. All right, let me see what else I got. I got any other questions up here? I talked about sector rotation, Upstart. I don't see any more. I'm just looking through. Well, I'll look through and see if you guys have any questions or anything you want me to talk about in the interim. Can it work swinging options? Gary, I'll get to Clorox in 1 second. Tony, options work. The question is timing. That's always been the biggest problem. So which I'm telling you is that if you want to use the options, feel free to use options. Just understand that you could be right, but your timing could be off. And if you decide to use options, whenever possible, buy time. Buy more time. Don't buy a day or a week. As you know, unless you know of some type of corporate event coming up that could propel this in terms of time, like Upstart. The corporate event came. That was yesterday. So now the question is, what's the follow-through going to be? All right, let me see now. Clorox, CLX. Bear with me a second. Gary, I'm going to a monthly chart. I have not looked at Clorox in a long time. And the reason being is I know that Clorox basically made its run because of what was happening with the virus and so forth. It looks like that the stock's coming off its all-time high at 240. And now it's I'm looking at a monthly chart, excuse me. Now I'm going to go to a daily chart. Give you a little, let's go to a weekly chart. Give you a little more color. All right, I'm looking at a weekly chart going back maybe a year. Wow. Yesterday, Clorox broke broke support going back to July 2021. It broke that support at 166, where it is right now, where it closed today, 166. So it's in a new trading range between 166 and 145. All right, so that's what you're looking at. Let's see. 1, 2, 3, 4. After hitting its all-time high at 240, it's broken through 4 support levels. All right. Typically, what I tell you guys is, if you're on the stock long term and it breaks, again, if you got a tremendous profit and you're letting it run, which I had posted on here one time, then give it more room. I'll say 2 to 3 support levels. Now, this thing is broken through 4 support levels. So I'm not sure if you're going to see a bounce. And if it does have a bounce, it's going to take a lot of work to get back to that 240 level. So, Gary, I'm not sure if you were short-term trading this or long-term trading this. But, again, having dropped down to 4 support levels, actually on the 5th support level, I would say I would probably take profits. Because if it doesn't hold here, and if it does bounce, I'm not sure how much you're going to get. But if it doesn't hold here, your next stop is 144. And at the 144, I'm not even sure how much you have after that. I'm trying to look now. Yeah, at the 144, your next stop is 138. And like I said, I'm looking at a weekly chart. Yeah, it looks like Clorox has finally run out of some steam here, Gary. Near term. Yeah, buy time, Tony. Always buy time, Tony. Anytime you can, buy time. Now, for those who trade options, don't understand, when you look at the time and you buy it, let's say you pay $5 for that option. Understand that means that you need that stock price to go $5 above the strike price. For you to, $5 is you need the stock to move $5 for you to actually break even. So one of the disadvantages when you buy time costs you more money. And the more you spend for that option, the harder it's going to be for that option to make money. So that's the juggling that you have to do. I find myself going back and forth between months and playing with the numbers and looking at trying to determine which one I want to buy. If I'm lucky, keyword, if I'm lucky, and I know what I'm saying, and I buy a shorter term, because the spit it out, Mike. The stock starts to run, and I buy a shorter maturity, less time. When it starts to run, I'll actually sell that, take the profit, and then go out and buy more time. Yeah, I've had a number of options expire on me. All right, Mr. Cornfield, what do you have here? IMLN, ACI, MCP, ARES. Bear with me a second here. What's up, Troy? All right, so let me take one at a time. ILMN. Wow, I haven't looked at this stock in years either. I'm looking at a monthly chart. All-time highs. Anytime I see all-time highs, I like that. All right, now I'm switching to a weekly chart. All right. Wow. All right, you broke out from 386 was the breakout to the old high 550. Then it came back, came back and retested this 379 level. And then over the last month, it broke out, but it has not taken a new high. All right, that's on a weekly. And volume's kind of light. So let's see what it looks like on the daily. All right, on the daily, you got earnings coming out when? August 5th, earnings are coming out. August 5th? Oh, they came out. Yeah, they came out. They beat. All right. I don't have a real good feel for this, and I'll tell you why. Stock's been kind of creeping up, but volume's been really, really light. Stock's been creeping up, but volume's been really, really light. All right. And it's been creeping up on light volume. I don't like stocks that creep up on light volume. I just don't. I mean, the last couple of days, it's been because earnings has been a little higher, but I just don't like that. Although the stock is at a new high, I don't have a feel for this one. Don't have a feel for it. Don't have a feel for it. I will say one thing though. There was some volume behind that breakout to take it to its all-time high of 550. So the one thing I'll say to you, and when it broke out on that volume, it was about 4 times average daily volume. So again, if you're looking for to buy this on a trade, I would look for the breakout in price and volume. ACI. Albertson broke out. It's running. All-time highs. But here's the deal. Follow me now. Follow me. Albertson stock went parabolic. What I mean by parabolic, it means it literally went almost straight up. Since July 29th. It's done nothing basically but go straight up. And volume's been there with it. So here's my comment on this. Stock just ran off a heavy volume. And it's done this before. And my point is it ran off a heavy volume. And the stock went basically, if you got it when it broke out from the old high, which is around 21, it ran from 21 to $28, $29 a share. Not bad for short term, but at the same time, this is Albertsons. You're not going to get that kind of move on a regular basis. And as I told you, there's a gap here between 26 and 24, so expect it to fill the gap. I mean, if you trade this nice trade, understand it's a grocery store, thin margins. You might get some nice moves in this, but it's not going to give you what I would call these type of runs on a regular basis. GP. Trading well. If I'm correct on this looks like it's a REIT. This must be a real estate REIT. So you guys know what's going on. Nice looking chart. I'm just going to go to a monthly. I'm not a huge fan of REITs. That's just me. That's me. All right. So I'm not telling you not to trade this. All right. Stock broke out back in May, and it's been basically an up tear. My comment to you guys is on this type of stock, most likely what's going on is it's benefiting from what's going on in the real estate market. Rentals are up. Home prices are up. Real estate's just in a bull market right now. And by the way, it's not in a bubble. It's in a bull market. We're not in a bubble yet. I'm not saying we're going there, but it's not a bubble. So don't get caught into that thinking we're in a bubble. All right, and last but not least you gave me was ARES. I don't know what they do. I'm looking at the monthly, nice monthly. Now I'm going to a weekly, nice weekly. Now I'm going to a daily. Let me zoom in on this. Yeah, I mean it's got a really, really good chart. Consolidates, runs, backs and fills, consolidate, runs, backs and fills, consolidate, runs, back and fill. Now, the only thing I'll say about this most recent backing and filling, typically when you get, I shouldn't say near the end, but typically sometimes when they're running, I should say out of steam a little bit. I'm not saying this thing's not going to work. What you'll notice is that the backing and filling don't last as long. So if I'm looking at the chart now, back in July 2020, it traded between $36 and $42 a share for what? 4 months, 5 months. Then it broke out and ran, consolidated for another, that one's 3 weeks, then ran, consolidated. So these last 3 consolidations, one was for basically 2 weeks and then it ran, and this one was for 2-3 weeks and it ran. This one right now is backing and filling a little bit. So with that said, Mr. Cornfield, here's how I would play it. I would actually, if I was trading this, hey, what's going on, Hank? Or Henry? Hank. The way I would play this is I would expect for a little more consolidation and on the next move through the old high. The next through the old high, which is around $74 a share, is when I would look to buy it. And again, I would look to buy it on 74, on move through 74 off of some really, really good volume. All right. Let me see here. I got a firm. I'll take a look at that. Just sharing. Regulation is always a concern. Inducing bill that has numerous effects. All right. Cryptocurrency. Thanks for that information. It looks like AJ. Hey, AJ. Thanks for the information. The cryptos are going to go through a lot of regulation. No question about it. There's going to be a lot more regulation coming than what we've been seeing. All right. Let me see. Affirm. AFRM. Ooh. All right. Affirm. Another IPO stock that I actually watched and traded. Affirm price range was 41 to 44. Got close to 150. Backed and filled. Backed and filled. Let me zoom in on this a little bit. All right. Right now, the stock has worked its way back up to resistance at $68, $69 a share. If it can get through this range, your next stop to the upside would probably be close to $80 a share. If it does not hold this, it's going to trade down to the bottom of the trading range, which is $60. It doesn't hold the 60, it's headed down to 50. Now, the one thing I'll say to you guys, and I say this a lot, remember, stocks typically move to the path of least resistance. All right? Path of least resistance. If you have a whole bunch of guys selling and maybe one small buyer, the path of least resistance is to the downside. If you have a whole bunch of guys trying to buy the stock or buying it and not many sellers, the path of least resistance is to the upside. All right, so I just want you to think about that. Now, when I look at a chart like Affirm, the reason why I said the path of least resistance to the downside is because I'm looking at all the stock hanging over its head to the upside. So like I just said, if it works its way through this 69 number, you're looking at heat at $80, and you're looking at 80, 81, 82, then you're looking at some more resistance at $90 and more resistance at $100, and you got some more resistance at 110. It's kind of scary. And then you got some more resistance at 120. So as you start to move up, you got all these walls that are hanging there waiting for people waiting for the stock to get back to what they paid for it before they sell it. Now, I know I have a bunch of you guys on this call, and I know you've all heard this. When you talk to a friend and you say, you got a dog, when are you going to sell it? I'm just waiting for it to get back to what I paid for it before I sell it. That's a common statement amongst investors. All right? Well, think about that. If that's the case, if that's what the bulk of these guys are doing, then you know what's happening. That's why you have all the stock hanging overhead. For my rock climbers, it's almost like climbing up the side of a rock or mountain, and then you have some overhead. I'm not saying you rock climbers can't climb it. I watched the Olympics. All I'm saying to you is that you know it's a lot of work when you have to actually come from underneath a cliff and crawl out because you have a lot of overhead hanging over the top. All right, so there was my little Olympic comment, which I threw in there. All right, I don't see any other questions here, so let me just leave you with I told you I came up with a new mantra. I like this mantra. I think it works for me. And it really explains the way I feel, and that is buy high and sell higher. Now, from the time you got into the marketplace and your friends and family members heard that you were going to invest, they told you what? Buy low and sell high. I want you, and we talked about this. If you're buying low and selling every time the stock hits a new high or selling high, then you're taking your biggest winners or your winners and you're getting rid of them and you're holding your losers. You're holding the stocks that did not go higher, but the ones that stayed the same or went lower, and you're holding them. All right? Now, buy high, sell higher. I want you to think about your best winners in your portfolio. Forget about what I talked about. Forget about what I'm showing you. Look at your best winners. Your best winners. And ask yourself, if I had sold this stock every time it hit a new high instead of holding it and watching it trade, I'd have been better off. All right? Now, again, I went through this as a young broker. And I haven't talked about this in a while. I'm going to get to this in a second, Andy. I haven't talked about this in a while, but I'm going to talk about it right now. As a young broker, as a young broker, no gray hair on my head, no glasses, young broker, I would come home on the weekends and go through and analyze every trade I did during the week. I did that for years. I analyzed it. Why did it work? Why didn't it work? Did the stock go higher? Did the stock go lower? What would I do different to improve my chances of being profitable? All right? This is how I formed this. This is no different. I'm an ex-jock, so I admit it. This is no different than going back and analyzing your team and saying, okay, what do we need to do to win ball games? What do we need to do to win? Because it's about winning. It's not about showing up. It's not about just putting a uniform on, going sitting there and saying, hey, we came, we showed up. If you put in that uniform as an athlete, your goal is to win. All right? And one of the ways that you win is you go figure out strategies, find things that work and things that don't work. All right? Analyze yourself. Critique, well over 30 years in the IPO market, and my strategy still works. All right? That strategy. Now, I have other strategies too, but that strategy still works. Those are the 3 strategies I started my trading career with. Analyze your trades, guys, and be honest with yourself. What did I do right? What did I do wrong? I think I told you guys, I have never been able to trade Microsoft. Never made money trading Microsoft. Made money just buying it and putting it in the portfolio and holding it, but trading it just never worked. So what happened? After the 3rd time, guess what? I stopped trading Microsoft. It's not about ego, it's about making money. My goal is always to make money. And if I'm not making money with a certain strategy, then don't get me wrong, I'll keep trying, I'll look at it, I'll analyze it. And I know certain strategies don't work in certain marketplaces. But when something's not working and I keep trying, and then I get rid of it. I move on. I'll come back and visit it, look at it, but that's how I trade. All right, I'm just checking my time. All right. Environmental. I guess that's what the name is. AV. I'm looking at a chart. Like I always say, came back and filled that gap back in, looks like January, where the stock gapped and went to all-time highs. And then from there, it's basically in a downward trend. Lower lows and lower highs. If you can get through this 104 number where it's at right now, you got resistance at around 115. And then you got a whole bunch of stock between 115 and 125 and then 140. So I guess what I would say on this one is I don't like to sit with stocks and watch them work their way through this. So what I would do is I would actually keep this on my monitor. If it's a stock I wanted to trade, I'd watch it and trade other things. And when it got to close to that 140 number, looked like it's going to take it out and things are trading well, then I would look to buy it. But right now, just follow me here. Right now, if I brought this stock and it's going to take it, let's say it takes it 4 or 5 months to work through all this to get to the 140 number. I could be somewhere else. EPAM sets a new high. Nike set a new high. NASDAQ I own set a new high. Why would I not take that money and put it in there and wait while those are going high and trading well while I wait for this thing to work its way out? You always have to think about time value of money, guys. Don't forget time value of money. All right, let's see. METC. Again, I don't know what they do. You're going to laugh when I say this because that's who I am. Let me go to a monthly chart first, but I'm going to say it. I can already see it. I'm smiling. All right, first and foremost, I'm looking at a monthly chart. The highest the stock has been is $15 a share. I don't like buying $8 stocks, $2 stocks. I just don't like it. Now I'm looking at the chart in this thing. It's worked through most of its major resistance. All right, but again, it still has work to do to get up to that $15 number. Switching to a weekly chart now. And now I'm switching to a daily chart. And I'm going to say the same thing I said earlier. If you really like the stock and you think there's a trade here, I would watch it. For those who understand charts, If you look at the chart on METC, from May 2019 to June 2021, it formed a saucer. You heard a cup and handle? Well, there's also a saucer and handle. Actually, and then it consolidated that handle, and then it broke out from $5, $6 to where it is now, $9. That was the breakout, and on volume. So again, for those who understand what I just said, for those who don't understand what I just said, pull up a daily chart, go back maybe a year and a half, look between May, I'm doing it again myself, give you exact dates. Look between May and June of 2021. So May of 20, get my years right. July of 2019 through June of 2021, it formed a saucer. And from June of 2021 through July was the handle, and then we had the breakout on volume, which was probably led by earnings. It's a classic saucer. Now, the one thing I'm going to say to you is that you got some resistance here. You might be able to get a push through the old high. But I think, Andy, that if you were looking to trade this based on the saucer and the breakout, I think you missed it now. So I would wait for some backing and filling some consolidation. Again, I'm just talking about technicals. I don't know the company. Angela, I just looked at MasterCard earlier today. Good looking chart. A lot of volatility in here, but it is what it is. Bear with me a second here. You're sitting right at support right now. $364 right in this range. You're sitting here right at support. You can look and see resistance right now is up in here at the 395 level, which is close to the old high. So you're in the trading range right now between 360 and 400. I don't know how aggressive you are. I know earnings are due out on November 1st. Okay, cool. So you're in the trading range. I'm looking at my time. Okay, I got a minute or two. All right. Follow me, guys, on this MasterCard. Follow me. At 364 is support. At 400 is resistance. For those who want to be aggressive traders, you can buy it here at 364, put a 10% stop loss on it, and it should trade up. If the market holds up, which I think it will, and run, it should trade up to $400 a share. When you get to $400, $400 and change, of 395, 400, close out the long position, and you could go short, but I would actually wait to see it start to deteriorate and then short. It's in the trading range. So at the bottom of the trading range, you go long. At the top of the trading range, you close out your long position and go short. Bottom of the trading range, close out your short and go long. I've done this in the commodities market several times. And the question that people ask, well, how long will this last? It lasts until it doesn't last. All right. I'm looking at another trading range in MasterCard from July 2020 through March 2021. The stock traded between 320 and 360. All right. I mean, there's a couple in here where it broke down, spike broke down below, but basically that was the trading range. So this stock seems to have a lot of trading range in. You can make money in a trading range. All right. I'm going to wrap it up here. And by the way, Angela, I own Visa. I just happen to like Visa more than MasterCard. That's just me. I think they're both fine. I think they both have tremendous upside potential because of this digital age in terms of currencies. And the no cash transactions that we're starting to see in the marketplace. All right, guys, I gotta go. Gotta go put some ice on this body of mine. Thank you for coming. I do appreciate you guys. I'm happy to be back. I'm looking forward to this, and we'll go from here. All right, have a great one. I'm gonna post this like I always do, and I will talk to you guys later. Thanks. Bye-bye.